Bill, Ted, Mark, Lalit, Martin. Bob, present and listening. I like that. All right. All right. Give me 1 second. Lalit, nice call on PTD. Thank you. Micron. We'll talk about Micron. I'll explain all this setups, but we'll talk about today. I actually we already have a call on Micron. That's part of my position, so we'll talk about it. You know, does it make sense to maybe even close it because of, you know, a Fed decision today? So remind me to talk about Micron. But you know, it's a position, live position, so I won't forget. Okay. Let's start. Welcome to Tradespoon and Yellow Tile. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tile. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Everyone else, welcome back. Really appreciate your time. We have a lot of people today. Makes me extremely happy. or you haven't seen this risk of standard stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing what I do in my own account based on my own risk tolerance level for general education, information purposes only. I should not be assumed that the future picks will be profitable or equal past performance. Trading psychology is important, right? I was listening for podcasts for these professional traders, hedge fund traders, and everybody says the same thing, right? To be a successful trader, you have to be mechanical, right? It always has to be rule-based. And it's always rinse and repeat, right? If one day you do, you trade, meme stocks, and the next day you trade in JP Morgan, and then sometimes you risk $1,000, sometimes you risk $200, then it's not a repeatable process, right? It's not a mechanical, it's not a repeatable process. So to become more mechanical trader, disciplined trader, I think, at least for me, what it takes is journaling, right? Keep a journal and write down the rules, right? And in that journal, before you put on a trade, you have a checklist to prevent you from deviating from your trading plan. What are some of the rules that I'm breaking? One is, sometimes I get excited. I hear, Chinese stocks going higher. Bitcoin is going higher. Nvidia is going higher. Biotech everything's going higher. The boat is leaving. I'm still here. So to prevent having, but as time goes on, I realize a lot of these asset classes, they're highly correlated to each other. It's not like when you buy Nvidia, you're not buying Bitcoin, or you're not buying Robinhood or Coinbase. So I think at least in the beginning, 4 positions is more than enough, right? You can have one high beta stock or ETF. You can have one financial. You can have one energy and one hedge. It's enough, right? Because if JP Morgan is going to go higher, maybe General Electric is also going to go higher, and maybe even materials is going to go higher. The move is a basket. Right, they're highly correlated. So I think 4 positions, that's one of the checklists. 2.5% of account value of risk, right? So if I'm holding that's the most important checklist. Number of positions and the maximum risk. I mean, trend change, right? If you think you can catch the bottom or you can catch the top, usually I have a rule, has it been 2 to 3 days of reversal? If it's only been an hour or it's only been 1 or 2 days, well, that doesn't mean the trend has changed, right? So that could be one checklist. Volume, right? You want higher volume. You have VIX reach extreme. You can look at ABC pattern. So here's the list of different checklists. But the most important is position size, and liquid names, right? Especially if you're a trader. If you're a trader, liquidity is important. If you're an investor and you're holding position for a year, I guess volume might not matter to you that much. Okay. So what are the let's look at spiders. So we're heading into FOMC meeting, right? I think market is either going to rally 1 or 2. Usually it just doesn't stay there and do nothing, right? So because I think at this point, especially that the earnings season are kind of behind us and the next one hasn't started yet, it's all about interest rates. Okay. Did I lose you guys? No, maybe I just lost trading. Okay. So market opened 515 flat. We're kind of facing overhead resistance, right? That's the overhead resistance, and this is support. So trading in a narrow range, 508 to 517. So that's your resistance number 1. If we break through all-time high, then 520, 525 is next. And if we break support 508, then it would be this level, which is around 505 and pretty well supported. So those are support number 1, support number 2. These levels, the idea, if you're doing day trading, right, maybe 510 is your low, right? You don't want to risk more than $250. on $25,000 portfolio, which would be 1% if you're doing day trading. If you hold in position overnight, average account is $10,000, 2.5%, $250. So at these levels, you don't want to be down $250 basically, whether you're a day trader or long-term or holding position overnight. So $250, 2% stop loss if you're holding position longer. So that's how you determine the size, right? So this is 5 points stop loss. This is 10 points stop loss divided by 250. Then you get 50. You know, here you can risk 50 shares, and here you can risk 25 shares of S&P. And that's how you would do all your trades, record them, go through the checklist, and then, you know, if your position was, and then I would split it into 2, because, you know, I mean, market could be up, and by the end of the day, it could be down, especially in front of FOMC meetings. So then you split the trade into 2, right? You put half of the shares now, and, you know, if market is getting oversold, then maybe you consider putting another half, depending on what Powell says, right? But that would be my thought process. So let's talk about PDD, right? We talked about PDD yesterday. So again, this earnings season has been extreme. They do well, and companies get punished if they don't do well. Into extremes, right? Where every day, almost every week, there is some company that moves beyond historical volatility, right? Beyond 2 standard deviation. PDD is not beyond 2 standard deviation, but I did 152, 145, 152, 160 call spread if it was a positive surprise. And you can watch the recording yesterday. How did I select the strike prices, right? I looked at the open interest at these levels. I looked at implied volatility, historical volatility, and I did the same thing on the put spread. So I risked 80 cents, roughly 80 cents, 83 cents. And now, in my ideal world, I want to close so it's 2 spreads, right? One is bullish, one is bearish. Butterfly is just basically debit spread and a credit spread, right? One is a debit call spread, one is a credit call spread, one is bullish, one is bearish. The bullish one, I want to, the maximum profit is 7.5. Probably not going to get it today. Implied volatility is not going to collapse that much. So somewhere between, I don't know, $2 to $6, I want to close this trade. And then 160, 152.5 call, same thing, I want to close for 50 cents. Right, so let's take a look where they're trading right now. And PDD. So usually you want to wait. If you want to initiate a new trade, you want to wait at least 15 minutes. Let's see. PDD is trading at 145. So let's watch PDD. So it's trading at 148, 147. It's trading 145. Let's see, the spreads are trading at. Okay, so I can close the debit spread for $2.30 and the credit spread for 60 cents. So still make significant. So let's just do that. So let's do change this for, and it's as it's down, try to close the credit spread. So what is it? 75. So I'm going to try to close debit spread, which is this guy. 160, 152 and a half. Sorry, credit spread. So as it moves down, you want to take advantage of closing the debit spread. Okay, close it for 75 cents. And then close, so losing a lot of premium. What PDD pulling back? That's pulling back. Let's see. Let's see if I can close it for $2. So I can close it for $1.80. So I closed for 70 cents. I can close this one for maybe, oh no, it's getting close to 2. So I spend 80 cents. Well, let's see, PDD still going lower. Spread is trading $1.70. Okay. So let's see if it can find the bottom, at least at this level. Right, so the idea that there is a lot of positioning at, well, the weekly is at 150, and then the monthly, the April, is at somewhere around 145, right? So that, I mean, it could act as a repellent, it could act as a magnet. So assuming it's a magnet, 145, right? 140, 140. Let's see, we have 5 minutes candlestick. So waiting 15 minutes. Doesn't look like it's holding position. $1.30. 838. How's the market doing? Let's see. Spiders is flat. China is slightly higher. VIX slightly higher. Okay. Let's look at how it moved after hours. Yeah, it's already closing the initial reaction. Okay. So we have two candlesticks. Let's see. So basically, I closed the bearish position, right? Bearish credit call spread. Now I have a bullish call spread, but I needed, PDD to rebound to 155 level, right, and hold this level. How's the volume? Yeah, and volume is pretty low. So right now the spread is trading at $1.30. Yeah, it looks like it's getting weaker. 842. Yes. It looks like it just continues to be weak, so I'm gonna get out. And because in theory, it could actually close the entire gap. So let's see, what can I sell? 0.9. Let's wait another minute, 8:45, and see if it stops. Bitcoin big swing from 60,000 to 64,000. Hell, PDD, April close, good. Bob, Fred, good morning. John, good morning. Bad day. Intel trading ahead, yes, good morning. All right. Okay, so now we have 15 minutes. I mean, this level better hold, otherwise it's gonna keep going lower. Let's see if we can stage at least one green candlestick. What is it trading at? 70 cents, 75. Let me see what I have. Yeah, looks like it's not catching a bid. Let's just try to close it for, what is it trading at? 80 cents. Looks pretty weak. So 82 cents. Okay. So it didn't work out as well as I thought. So this acted as a repellent, basically, which sometimes it does, right? Very large volume, right? We got to 145, 150. Instead of staying here, because there's a lot of positioning. I mean, sometimes it goes to the right, sometimes it goes to the left. So this time it just went to the left. So basically lost the premium of the debit spread. I mean, of the butterflies, both butterflies. But I mean, it's a low risk but high return, right? If it stayed at that level, that would have been a good trade. All right. So let's look at PDD. Yeah, it continues to deteriorate. All right, let's review the other positions. Will be watch selling. All right, so yeah, Paul's speech today. Thank you, Kevin. Faust, good morning. Intel, Kevin, thank you. Calls of thank you. Victor, do I think that Tesla will continue to break down? Let's look at Tesla. Well, again, I think it's I think the volatility will pick up, right? So let's look at first QQQ. So going into the event, basically QQQ is flat, right? Give me 1 second. Still have the PDD that I need to figure close in my personal account. It looks like it's trying to rebound. Just want to make sure I don't have any positions left. Sorry about that. Okay, I'm done with my PDD. Looks like trying to stage a rebound, but okay. So Tesla, right? Sorry, first QQQ. Fighting for this uptrend. It's trying to retain this uptrend from October lows of last year. It broke below that level. which is 433 level. We've tested it this many times in the past in rally, basically, because it's overdone, right? And I think they're dependent. Obviously, Tesla has been underperforming the market, and I think after you break down and stay below 200-day moving average, you want at least couple quarters of positive earnings momentum and earnings news. I think buying Tesla right now, it's too early, right? So if you're a trader, it's probably early. If you're a long-term investor and you don't mind buying Tesla, if it breaks down to 100 level, then I guess it's fine, right? You can just use dollar cost average. But right now, let's look how QQQ is positioned. So for today and tomorrow, right? For today and tomorrow, the large support on QQQ is at 435. 14. I mean, it's not huge, it's not 10,000 or 20,000, but 1,600, 1,800, that's, I think, big enough. So 435, peak is at 434. So basically, people are buying puts in relatively large quantities at 433. So 433, 434 is your line in the sand. If, there's going to be announcement, then there'll be digestion, right? So if by end of tomorrow, let's say, by end of Thursday, we're below 433, I think the market is going to continue to until 425. Right, until 425. I mean, you have 50-day moving average 430, but 425. Right, so 430, 425. And you can see a large position at 430, right? You have next large, so if 435, if the 435 doesn't hold, the next one is 429, right? 429, close to 50-day moving average. And then if you zoom out, let's say March 22nd, now we, significantly bigger put position, right? That was 2,000. This is 5 times bigger, is 430, right? So 430, well, it's 50-day moving average, right? So 430 is, we're talking about 10,000. Now we're talking about 20,000 to 25,000 open interest contract, still at 430. 30 is well positioned, which is 50-day moving average, which is a 50-day moving average. So that's QQQ, right? But QQQ is doing much better than Tesla. Tesla is weak, right? It's sitting at 160 support. That's the lows. Again, if your horizon is less than a year, I would not. I think then I would watch this level, right? The last week low. If we break below 160 last week low, and especially if QQQ breaks down, I mean Tesla is probably going to lead the market to the downside. Then the next level would be October lows, right, or December 22 lows, which would be 113. A pretty big drop, right? It could drop, 50 points. So for now, I would wait, right? I mean, there hasn't been a green candlestick, right? And we talked about this ABC pattern. Okay. So that's Tesla. FXI is up and the entire market deteriorating. Is flat, QQQ flat, Spiders flat, IWM a little bit weaker. Gold, silver is flat. I mean, nobody's gonna, put on a big position in front of FOMC meeting. Again, the consensus, at least what I've heard, is that Powell is gonna be right. He could basically indicate that there might not be interest rate cuts first half of the year. I don't think he's going to say interest rates cuts are off the table. That's probably not going to happen. That would be very bearish for the market. But he would probably say that, it's too early to decide. Inflation looks like, stickier. So, we're probably not going to cut rate in May, but that's already kind of high probability, but even in June. So he basically could indicate that instead of 3 interest rate cuts, there can be only 2. And I think that then the interest rates will go higher. Right, then the interest rates will go this way. Excuse me. I mean, if he basically positions himself that there's still 3 interest rate cuts and we're into elections, and elections is November, that means he needs to start cutting them in June. Not June, July, because there's not much time left. He definitely doesn't want to do it like right before the elections, right? So then the interest rates will go here. My personal opinion, they go higher. Right, they go to 4.5. I mean, I don't think they're going to get to 5. Sorry, but I think something like this makes sense. Excuse me. So I think initially interest rates going higher, right, and then I think overhead resistance is around 450. 450. Yeah, that's kind of the next level of overhead resistance. So I think initial people are going to be bearish because market is overbought. So we do have some kind of a rate jump in interest rates, and then as long as there's still interest rates cuts, sorry about that. I'm trying to recover from cold. So I think as long as there is still interest rates cuts this year, which that's the best base case, then interest rates will drop. So that means QQQ can also potentially drop and then rally. Right. So I think something like this does make sense. Right? As the, obviously he sounds bullish. Market has been consolidating for a few months. So you could have a breakout. That would be the best case scenario. Right. But I think core scenario with QQQ, I think inflation is sticky, right? When we go to a store or we try to rent or we try to fly, we know that inflation is not going anywhere. And now even producer price index, PPI, went up. So assuming that inflation is here to stay, that means, there are two paths. You have elections, and you need to kind of stimulate the economy and not hold the interest rates high for too long, because that will eventually cause the recession that Powell is going to do. And then if inflation is stickier, then down the road after the election, they can decide how to deal with higher inflation. Right, so back to 70s and 80s, right? Walker, what's the other guy? Burns, right? One Fed wanted to stimulate the economy, cut the interest rate, and Walker came in and said, inflation is out of control. He raised the interest rates. So we could have a repetition of 70s and 80s, where it's going to take, next few couple years to get the inflation under control. Obviously, some people argue that 70s and 80s are different. We're a global economy and blah, blah, blah. But there's just not enough data points, right? It's like, last time we had similar setup was in 70s and 80s. 95, we had a similar setup. The inflation wasn't as hot as it is now. But interest rates were raised, right? And then they lower them, and we had soft landing, and inflation kind of never took off. So it could be 1995 scenario, it could be 70, 80 scenario, and right now it's kind of hard to tell. All right, let's review. Okay, 908. Let's just review the positions. I would suggest to review position as you head into this event. Okay. Positions. So EWJ. Let's look at EWJ. So Bank of Japan also announcing interest rate decision. So far, it closed the gap. So Japan is still staying above the uptrend. NVO. If it reaches 50-day moving average of 124, I would consider adding. JP Morgan, I did yesterday. It continues to go higher. Let's see, what did I have as orders? JP Morgan. Okay, so I bought at 192.10. It's trading at 194.80. So I'm looking for 2% gain. So it could, obviously after, it looks like it wants to break out after FOMC meeting. It could go higher, it could pull back. I would probably be a buyer and pull back. So still long JP Morgan. We talked about PDD. Still have a QQQ put spread in case there is a negative surprise. I propose either QQQ put spread or SH. One of these four positions could be just a hedge. And ExxonMobil has been going higher, right? Energy has been leading. Let's see, into the Fed meeting. It's taking a pause, but ExxonMobil, 114, 140, 15, we know there is no overhead resistance. So consider trimming or closing position if it reaches 114, 115 level, because there is a large call position at 115. Let's just double check that. Paper 19. Yeah, 115. So there is pretty large position at the 115 strike of calls, right? Then this is positive, so most likely people selling 115 call in rather large quantity. Makes sense that it's going to consolidate at 115. That's common consensus that to keep the inflation down, the only way to do it is raise interest rates, right? Not lower them. And that means at some point there is a recession. But that has been an argument for the past 2 years, right? Since October of 22, and 23, 24, it hasn't really worked really well. So the point is, everybody's kind of have these consensus, but nobody knows the timing, right? That's an issue. Thank you, Kevin, for your feedback. Appreciate it. Okay. Gold is up. Let's see. I mean, gold is a good hedge against the inflation. Gold is up. Let's see. So right, and that's all the positions. So gold, I think Bob mentioned Bitcoin. Bitcoin has been a good proxy for risk taking, right? So 60,000, right? What's the other options? Was BITO? Let's look at the position. So BITO, so it dropped to 28, right? Let's see how well the BITO position at 28. Excuse me. Well, Bitcoin, it's kind of one-way trade, right? It's people are basically buying calls, 30, 32, 34. Not a large quantities, but big position at 34. There's no put buying. This could be a kind of a leading indicator of what to come in QQQ. And I think, again, if we break to the 28 level, next level will be 50-day moving average. In Bitcoin, I mean, we're pretty far from 50-day moving average. I mean, that makes sense, right? We were at 60,000 this morning, right? Bob says if 60,000 doesn't hold by end of tomorrow, then the next level is 50-day moving. And crude oil pulled back, but still above the breakout 80 level, which is good. But it does look like it's rolling over and, sensitive to interest rates. Other than that, NVIDIA was able to recover yesterday, right? Going through consolidation, right? It's either going below 850, right? Or it's retesting 950. So it could be up 70 points by end of tomorrow. It could be down. Well, it could be down 70 points too. What else is interesting? I mean, small cap still holding on to the 50-day moving average, so that's good. And usually you want to see if there's any issues with being flat. So that's a very strong bullish. Signs of concern, I mean, obviously NVIDIA and Bitcoin are weak, right? We've seen SMCI. I think I actually read an article why SMC. One of the reasons SMCI down because they were trying to sell shares, like Goldman Sachs or one of the IPO companies that took the company public was trying to sell shares, and there was no demand, right? Nobody was buying these shares. Everybody's concerned, so they tried it again. So, and that's causing SMCI to fall, right? That's one reason, right? Because they're raising, they're selling big, block of trades and no demand, so the price dropped. Another reason is, extreme call buying, and dealers have to unload the positions. So that's also been weak going to the Fed decision. Lalit, how about Micron? Let's look at Micron. So Micron, I mean, it's a similar setup to PDD, right? So you do have a large positioning at 110. It's trading at 93.83. I looked at the historical volatility, 10%, right? So usually it moves 10%. I think last time it moved more. Let's see. Sorry, not PDD. Yeah, CPD closed the gap. Yeah, it's too bad. All right, fine. Micron. What did it move last time? Down and up. 10%. Okay, so 10%. So historical move is 10%. 10%, 9 is 102. You have large position of short at 110. So again, implied volatility is much greater than historical volatility. Same setup as in PDD, right? Same setup. So I think it makes sense to sell 110 strike, right, on calls. Let's see. So I actually bought 110 call. So it's trading the same level. So I think it will gravitate toward 110 level, right? And that's where the open interest is. So maybe so 110, 115, 120. So 110, 115, 120 butterfly. On call spreads, put spreads, again, 10% down is about 85. You do have a short strike at the 85, right? Not a lot of positioning, but relatively big. So I would sell 85 put, right, and do 80, 85, 90. So 80, 85, 90 put spread. And 100, 105, sorry, what do I have? I have loan call, 110, 110, 115, 120. But again, I would do it after the Fed, after press conference ends, right? Because you expect a rise in volatility, big jump in volatility. So then I would have to wait. BRICS says they will back their currency with 40% reserved in gold. Okay. We'll hold PDD. Yeah, PDD is, my trade was short-term trade. I mean, that's kind of, sometimes there is continuation, right? It gravitates toward the strike. This time it just kind of collapsed. So, last time it was up and then continued to go higher. Like this time, it didn't do that. So, hard to predict. But okay. All right, guys. Thank you very much. Have a great day. All eyes on the Fed. I would wait for the press conference to end to make any kind of decision. Usually today and tomorrow, people are gonna reposition, right? Some people are gonna think interest rates gonna go higher. Some people think interest is gonna go lower. So we just have to wait and watch, right? But watch those key level on 10-year yield on QQQ on spiders. All right, thank you very much and have a great day. Today is Wednesday, so Scott will do the closing bell. Faust, thank you. Have a great day. Thank you, Terry. Thank you, Bob. Thank you, Kevin, Lalit, Ernest, Victor, Bob, Faust, Fred, Lalit, Larissa, Alone, Bob, Carol, Claude, David, Ernest, Fanny, Faust, Fred, Cecile, Ian, John, Kevin, Lalit, Mahfouz, Mario, Martin, Maurice, Patrick, Raul, Ted, Terry, Victor, Bill, William. Thank you very much.